Hello everyone and welcome to today's morning report on Friday the 15th of May with me, Richard Perry, market analyst at Hantech Markets. The European trading session has got off to a fairly positive start actually, mildly higher on the DAX and the FTSE both across, and the move has basically been driven by this correction in the bond markets. I think bond markets are basically driving financial markets across the board at the moment, and we are seeing this move back down in treasuries yesterday. Excuse me, and that move in treasuries that, treasury yields, sorry, I should say, and the decline in treasury yields has allowed for the S&P 500 to break higher, and that decline in treasury yields has continued into today. And it certainly looks to be continuing, and that is helping to boost sentiment for equity markets and also the dollar as well. This is the US Treasury, and I'll also show you the Bund, which is also lower. The Bund has been on that huge run higher, and it's starting to look as though it potentially may even reverse now, or certainly stop its advance. Very interesting chart that I found yesterday, or I did yesterday for my analysis. I saw that the Bund yield, Christ, if I can get it. Here we go. The Bund yield is started to sort of turn lower at that 38.2% Fibonacci retracement of the huge decline. So that is interesting. And there's also, if you look at your technicals as well, anyone who looks at technicals, you'll see that there's been a potential sell signal on the Bollinger Bands as well, with a second high coming inside the Bollinger Bands, having had a first high outside it. So that is a potential Bollinger Band reversal signal as well. So interesting times that we're seeing in this Bund yield, and that is certainly having a driver of these markets. And what we're seeing today is the dollar starting to find a bit of support. And if I can find it, here we see the dollar just sort of consolidating around this support level around 93.25 on the dollar index. Sorry, excuse me. That has obviously been driven through by a little bit of a correction on the euro and a bit of a correction on sterling as well, that I'll talk about in a bit. But very interesting moves we're seeing on these markets this morning in the back of that, on those bond market yields. So the economic data that we've got to look forward to today, basically we're starting off into the afternoon really. We're not really got a great deal until we see the US industrial production data that comes out. Industrial production is due to, on a monthly basis, come out at 0.1% higher, which if you take on a year-on-year basis actually means that the industrial production is basically stabilizing slightly at around the 1.92% area, and that is just started to support, that would be 2 months in a row around that level. So interesting that, but industrial production has certainly been declining in recent months, as you can see here on the monthly data, which has been fairly disappointing. Interesting also that we've seen, we've got the capacity utilization data out as well, and you can see here on this chart, in the last few months capacity utilization has fallen away quite dramatically, and 78.4 is the expectation again this month, so it's not really picking up, and that is still back at lows levels that we haven't seen since 2013. So interesting that that remains in the case, and certainly the Fed would be looking out for capacity utilization to pick up, I think, as well, to show signs of a lack of, or to show suggestions that the slack in the economy is sort of being reduced. So that also takes you to the Michigan sentiment at 3 o'clock. Now, Michigan sentiment is had quite a decent run higher last month, and that's set to continue again this month with 96.0 is the expectation there on the Michigan sentiment. So a couple of bits of data out this afternoon which could well have an impact on the dollar. So be careful to watch out for those this afternoon. But my chart of the day today is the DAX index, and I've chosen the DAX because we've had this rally on the DAX back towards this neckline of this big head and shoulders top pattern. That neckline seems to have been a fairly significant resistance. Actually, it's been holding us back from a a rally. But look at also this 21-day moving average, which provided the support on the way up, and then has rolled over and is providing resistance on the way down. And basically, that is back almost to where we are at the moment at 11. Where is it? I'm just getting my numbers mixed up. 11,654 is the 21-day moving average there on the DAX. So that is something that certainly you should probably be watching out for. Interestingly enough, the MACD lines are beginning to sort of stop falling, which, well, if you look at the MACD histogram, for example, it is slightly bullishly diverging, although it hasn't turned positive yet, which positive MACD histogram reflects the lines crossing over, and that hasn't been seen yet. So it's not a positive, it's not a bullish move yet. It's just the fact that the selling pressure may be just abating slightly, but it doesn't necessarily mean that that's the end of the selling pressure. Because, so I'll just reset that chart. Because this is the hourly chart, and the hourly chart shows the momentum indicators, certainly in the past, in May actually, fluctuating between 30 and 70, which suggests fairly broadly flat, really. And if you actually look throughout May, you are pretty much flat on that hourly chart on the DAX. As volatile as it has been, which I think it has been very volatile, certainly in the last few weeks, really, I think the volatility has been incredibly high, flying around all over the place. But look at this on the DAX, right back up to that 11,620 resistance, which is that neckline level now. And I think if the RSI gets towards 70, maybe that could give you another opportunity to sell on a near-term basis to arguably play this range. And you can certainly see this resistance that comes in. If I zoom out slightly here, you can see those old lows and those new highs around that 11,700 level. So that is obviously a big area of near-term resistance. Not too far away from it now, 11,613, so about 80-90 pips away from that now. And with the hourly RSI up towards the high 60s, perhaps this is sort of coming back towards another selling opportunity area. And it'd be very interesting to see if these, because the DAX is sort of been fluctuating around with the euro and also the Bund yield, which is be very interesting to see if the Bund yield starts to settle and maybe starts to rise again, whether the DAX would fall off. So bit of correlation going on there that you might need to be aware of. But certainly at the moment, on a near-term basis, DAX is sort of trading broadly sideways, but underneath all this resistance, sort of 11,620 to 11,700, and unless it breaks through those resistance levels, I think the DAX could well start to come off again. So you've got yesterday's low in at 11,218 as the initial support, and also there's a slight, you could argue, a slight pivot around the or a consolidation. It sort of acts as a bit of a consolidation around 11,500, but it's not great in terms of support. And the fact that the volatility has been so high in recent days, I wouldn't take that as a significant level. You should put your any sort of stops around. But certainly the major levels on this chart are around that 11,700 level, and now the lows in place around that 11,200 level. So that seems to be where we're trading around at the moment. So I wish you good luck in your trading on DAX, and I'll speak to you later.